How many times can you use the FHA 203K loan? This is probably the #1 question I get asked, and I can understand why. It's a really awesome loan product, and for the investor-minded individual, people want to know how they can use this to really build up their portfolio without having to put that much money down. So I'm gonna show you what you can and can't do with this loan, specifically when it comes to buying multiple properties with it, and really why you might not need to use it to repeat it if you are looking to be an investor long term. If you have any interest in 203K loans or renovation loans, go ahead and hit subscribe. My channel is completely dedicated to using these loans, especially if you're looking to build wealth, buy more doors, and really start your real estate investing career by using these live-in, flip, and house hacking strategies. If you may or may not know if you're watching this video, the FHA 203K loan is an FHA loan. FHA loans require you to live in the property. Now, depending on where you've heard of this loan, for people that are looking to get started in the game, especially the real estate investing game and the property buying game, the 203K loan is a really great way to put in a little bit of money, but get a maximized return on the other side after doing a renovation. When you do a renovation on a property and you buy a fixer-upper, it's a great way to build equity. Another awesome thing about FHA loans and the 203K as well is that you're able to buy up to a 4-unit property, still only with 3.5% down. Now, with only 3.5% down, I know what you're thinking. Well, if I just keep doing this over and over and over again, I could buy hundreds of doors with only 3.5% down. The reality is that's not the way this works. And quite honestly, if that was how it worked, we'd all be rich and we'd all be taking full advantage of this. Now, that isn't to say just because you can't really repeat this and use this as an investor loan over and over and over again, that there aren't ways to do it and there aren't other strategies to still leverage this loan and still really launch your real estate investing career and portfolio building career into orbit. Now, before I go into the details on how exactly people use this maybe multiple times or what their other options are out there, go ahead and leave me a comment below and tell me where you've heard of the 203K loan. There's a lot of different resources that people find this loan. I know when I first got started, I had never heard about it until my mentor told me about it, but I really want to know where you first heard about it. So the truth of the matter is, again, this is an FHA loan. With FHA loans, you're only allowed to have one at any given time under your name. Now, in addition to that, with having the owner occupancy requirement, this isn't a loan that's meant to be repeated. Now, that isn't to say that you can't, but you just need to set your expectations on what this loan is and what it does for you. Just because you can't repeat this loan over and over again doesn't mean it's not an insanely powerful way to get started buying properties and building wealth. There's actually a couple of great strategies on how to leverage this and still be able to take advantage without breaking the rules. So the way I found out about the 203K loan was actually through a real estate investing mentor of mine. I had tried for years and years to buy my first property. I wanted to buy a flip property. I wanted to buy an investment property. And I was just trying to find some clarity on what would be the best way for me to get started. I read tons of books, listened to tons of podcasts, watched tons of videos, was in multiple mastermind groups, bought courses, bought all kinds of different strategies and masterminds and all these things, and tried wholesaling and tried flipping houses with no money, tried seller financing, and ultimately I was coming up short. It wasn't until I started talking to one of my real estate mentors that I actually heard about the 203K loan. Up until this point, I had never heard of it. Also, up to this point, I always thought you needed at least 20% down to put down on a house. So when I heard about the 203K loan, I was really interested because I looked at it through the eyes of an investor. And that's what my mentor told me. At the time, I was the perfect candidate for a 203K loan. I still hadn't owned a property at the time, and it was a way that I could buy my first property, only put 3.5% down, still do a renovation and flip it, but still live there and still get all the benefits of what the FHA loans allow you. Low down payment, low interest rates, comparatively to the other loan products that are out there for investors. So the plan was to buy a property and renovate it, rent out the upstairs, and then go live in the basement. It wasn't until I started searching and coming up short that I realized that I could actually buy a 2 to 4 unit property with this loan. That's why after placing tons of offers, I eventually found a really distressed duplex property where I lived in one unit, rented out the other unit, and was able to forecast that other unit's future income into my debt to income ratio. That finally allowed me to purchase something in my market which was extremely expensive, especially for a guy only on one income in a very high cost of living area in Long Island, New York. So the point here is that you're not only just using this 203K loan to do a renovation. If you look at it through the eyes of an investor, even on your first purchase, you can really squeeze a lot of equity out of the deal and also create a rental out of it that you can use and go buy more properties with in the future. Now, again, the problem is that with an FHA, that you can only have one at any given time. Now, it's not really a problem, that's the way the loan's built. It's built in such a way that people don't take advantage of it. But that still doesn't mean that you can't take advantage of it for what it is, especially on your first one. Now, I bought a 2-family first time with my 203K. Honestly, after buying that house and building the equity into it and then getting the cash flow out of it, I was able really quickly to go buy another deal after it, not using another 203K loan. When you get your first real estate deal under your belt, whether it be the home you occupy or a fix and flip or buy and hold, you build up so much experience. You're also gonna build equity and you're gonna get cash flow from these properties, and that's gonna boost up the amount of money you have so that you can go and buy more. I'll be honest, the 203K loan, for as great as it is, isn't really the most efficient way to buy properties. But what's really good is once you get that first one under your belt and you start building some equity, you could take that equity and combine it with better financing options. That's what I did. After I finished my project, I had built $130,000 in equity on my loan. What I did then was start to have conversations with hard money lenders. Hard money lenders are asset-based lenders that allow you to get financing to purchase a fix and flip property, but they usually require somewhere around 20 to 30% down. In my case, they were looking for 30% down. Now, in this instance, that was half of the equity that I built, and they were able to tap into that equity with a deal that I put together with them, and that allowed me to put enough money down on the next flip that I did 6 months after I exited my first 203K property. Now, the good thing about hard money is it's very, very fast. I was able to close on the property within like 20 days, and it got me into the next deal very quickly. Now, I could have waited a little while and then looked at a couple different strategies to try to get into another 203K loan, but the problem is that I'd have to start gaming the system a little bit, telling underwriters kind of false things, and that's not the way this game should be played. Take that equity and use that equity in all those doors that you open from all the experience that you gained, and use that equity to go use other financing options that are gonna make it easier and quicker to go buy more properties. Now, there's another strategy that people use with the FHA loan that can work and is a way, if you're very patient, to get a lot of doors in a couple years' time. Now, you need to set your expectations with this. You need to make sure that your numbers are really correct, but this is a way that you could repeat the process and stay within the confines of the requirements. Again, there's nothing against using the program multiple times. You just always need to be within the confines of the guidelines. They're very strict on where you are moving from and into, and if you're renting out the original property that you're moving from, they have a lot of equity requirements, cash flow requirements, and also distance requirements on where you're going to the next property. Typically, the requirements are if you are looking to go into another property and you're looking to keep the original property with an FHA loan, you need to be moving out of your current market up to, over 150 miles or so into a new market, and you need to show and prove that the lease on the previous house is active and has been active for a little bit of time. A lot of banks also want to make sure that you have some equity in that first property as well. Now, the trick that people use is something called the 4-3-2-1 method. Now, I personally have never used it myself, but I've heard of people that have done it. Quite honestly, it's very tricky, but if you're patient and you stay within the confines of the guidelines, it is a way to consistently use this loan program over and over and over again. The strategy goes like this. The first property you purchase with the FHA loan or in a 203K loan is a 4-unit property. The guidelines are written pretty clearly that, generally speaking, FHA does not want to see a person go from a single-family home to a multifamily home, unless you could provide a really good reason why. Technically, it goes against what they call conventional wisdom. Basically, all they're saying is, why would you go from a single-family house if that's really where you should want to live versus going to a multifamily house? In FHA's eyes and underwriters' eyes, they think that that's a downgrade. Now, as people get smarter over the years with their money, there's a lot of people out there who are very willing to give up the privacy of a single-family home and go into a quadplex just to make a much better financial decision. But I didn't make the rules, so don't yell at me for it. I'm just telling you the way that it is. Now, what they do allow is you to go down in units. So if you're able to buy multiple properties in different parts of town or different markets, and you're able to switch and keep moving, you're able to go from a 4-unit, a year or two later go into a 3-unit, a year or two later go into a 2-unit, and then finally go into a single unit. That's one way that you can get multiple doors over a long course of time and still use this program. Now, again, I'm a big fan of the velocity of money. Speed is the best thing for you in real estate. That's why when you use the 203K loan, I really think that if you use it the right way in the ways that I kind of teach people to do it, that equity that you build on that first one is gonna open up so many doors for you. You're gonna be able to use that equity and tap into it to go buy more rentals and use other more investor-friendly conventional loans. These other loan programs are gonna go a lot faster, it's gonna make your life a little easier, and it's also gonna move you quicker to building wealth. If you're patient and you like the idea of never putting more than 3.5% down out of pocket for the houses that you buy, you can do the 4-3-2-1 method. Let me know in the comments which one you would prefer. Would you rather just build a bunch of equity and cash flow on the first one and use that and go use other strategies like using hard money, private money, or seller financing to go buy more deals? Or are you really interested in doing it the slow way and going 4-3-2-1? Let me know in the comments which one you would rather do. Also, if you like these strategies, go ahead and hit the like button. The engagement on the videos really helps me out. I know every person on YouTube asks for it, but we do it for a reason. Please do it for us so that more people could see my videos and I could feed my kids. Now, I just want people to know that just because the 203K loan isn't meant to be repeated over and over again, doesn't mean you shouldn't do it. You should still take full advantage of what it has to offer if you have the ability to go move into another property and put a little bit down, build a renovation, build equity into the property, use that equity and tap into that money and use it to go buy more properties. Combining it with other loans or private money or hard money is always gonna be a lot faster. And once you get that experience from the first one, it's gonna make you more confident on going into some of these other strategies. Now, me and my wife are now in the process of buying our own single family forever home, and we're gonna be using a home style loan. The home style loan is generally the best renovation loan for single family houses. It's better than the 203K for a number of reasons that I could touch on another video. But ultimately, this is something that's came way further down the line after I had already bought my previous properties using the 203K and then using conventional financing and investor financing, private money, all those different things. If you're interested in leveraging the 203K loan and using it to really start your home buying career on a really smart financial foot, go ahead and hit subscribe. Also check out some of my other videos. If you want to be part of my 203K community, where we discuss all different strategies and different ways to take advantage of the 203K, go ahead and check the links down below. I have links to my private Facebook group, another free training where I go into exactly how I leverage this loan to turn my $9,500 down payment into $130,000 in equity and $2,000 of net cash flow every month using the 203K loan. I hope you got a lot of value out of this, and I hope you really understand that, listen, just because you can't repeat this, or not even that you can't repeat it, but maybe not that you should, doesn't mean you still should not take full advantage of it if you're in a position to do so. I hope you got a lot of value from this, and I hope to see you on the next one. Peace.